Yes, hello everybody, and now it's 6 o'clock, and I hope you have a good evening. Today, this webinar would be around indicators. We'll take a look at the most common indicators. We'd learn how to use them and what to look for. And finally, we will learn how to optimize trades using those indicators. And let me stress that this is not an investment proposition. So if I say something during this, it's not because I want you to invest, but this is for educational purpose only. And also the risk warning that there is, of course, risk involved with trading. So I just let this be on for a couple of seconds so you can read it. Okay. So this is just an overview, and this is what we will be looking at today. We'd be looking at the Bollinger Band, the RSI, which is one of the most common and most used, the MACD, also very used and very common, slow stochastic, and finally the ADX. And the ADX, you might know it coming with two other indicators, the DMI, which stands for Directional Movement Index. And in this case, I don't think the two others are that important. I only, if I use this, it's not that common, but sometimes it can be a help. Then I use this ADX, but we'll come back to that a bit later. So let's move on. And the first one I would look at is the RSI. And the RSI is a momentum indicator. It shows you what is the momentum right now in the price, and a lot of people use it like an overbought and oversold indicator. And as you can see here, the overbought is between 70 up to 80, and this can move up to 100, but no more higher than 100. The mathematical way that it's built, and I won't go into that. You can read about that on the internet if you want to. But the way it's built is make 100 the absolute maximum and 0 the absolute minimum, and you can't go below or you can't go above that. But I often hear that the RSI is, they're saying that the RSI is overbought here, and it should be a selling area, something like that. And as you can see, it can be a sign here. You have this top here as a short-term top here, sideways movement, and move on again. But what if you sold at this point? Where would you go in again if you had it? Of course, we can then use what we learned in some of the other. We have some resistance, we have some support. We had a resistance area here around this. So if you sold here, you would buy again when you break out of this at this point, and then you have a new top here. But you don't really have any place to say them, okay, we are in overbought, but is it this point or is it higher? Where is the sell point from this? The RSI during that point doesn't reveal it, and you have the same issue down here with the oversold area. You can't really see if this is a big bottom or is it just a temporary bottom. And of course, the more oversold the market is, if we're going down to 10 or maybe even to 5, 7 seen some time, then the risk of a quick turnaround is bigger, but you can't be sure of that. So and we would like to make this shifted from just being indicator that follows the market to something that we may be able to use in advantage and in advance. So we make it into something better than its original build to be. And the way we can do that is to look at something different called divergence. And divergence is here I call it a negative divergence. You could call it a selling divergence. I've seen a lot of names for it, but negative divergence is when the indicators, as you can see here, you have one top here, which is this one, and you have another top here, which is this one. And you can see the indicator is dropping. It's not confirming that this is a new top, while this is going in the opposite direction. That is a divergence. And normally, when we can see this, and you will be able to see this as the price moves ahead here. The indicator wouldn't be able to come up here. It's not like that it's going up here and standing up here, and then suddenly during the afternoon or something like that, or late trading just drops down. Sometimes it does, but then you have some kind of spike, like this one over here. But it's rare that it does it. Normally, you can pretty quickly say that I have this one, and I can see that we won't be able to move ahead here. So this is a early warning that something is wrong here. The question is now, and the point here is, normally when you have divergence, you'll have a more significant top or a significant bottom, but you can't be sure that it's the top. It could be just a temporary top, as you see it here. Now we can see what happened afterwards, but at the point you wouldn't know if it was the final top in this, but the risk that it is a lot greater than the one that we saw over here, where it's just peaked and after what then it's possible that it's a large top and we had a big drop off. This was during the corona, so everything was screwed up there. Normally I would have expected this market just to make a temporary correction, maybe and something like this going and then shoot off again. But we didn't see that this time because of the corona, and market panicked, and we saw a lot bigger move down. What I also would like to say is, when you have seen this, if you have reacted to this, normally what you will do is you would say, okay, I have a negative divergence. I know that we possibly could be close to a top. I don't know if it is the top. I don't know if we're going to move higher from here, but what I can do, I can draw the trend line, and when I break that, the divergence has been confirmed, and this could be a major top, and we could see a large decline from here. So when the market or the RSI moves down and it moves into oversold territory down here, the negative divergence from that signal that was given up here is no longer alive. It's been fulfilled, and now something else could happen. We could maybe see the market move lower. That was a possibility. Or as it is here, it could start move higher again. So at this point, it's over and done with. So this negative divergence is over and done with at this point. And that's pretty important. That could be, or that is important when you're going forward, because I often see somebody calling afterwards this as still a negative divergence if this had been a higher high as a price, and then say this is, but when it has been down here, it's no longer, you can't use this as a point for going forward. So you have to do it, you have to start over again. And you see the same over here. You have this top is this one, and you have another one going on here, and a really deep one down here. So again, you have the market going up, but the RSI is telling you that the market is tight, and we could be close to a top around here. And often when you see the market peaking just near 70, then that is a real sign that now the market has peaked, and now you should be careful. Still, this could be just a temporary peak. We don't know that, but it could also be a larger peak. Normally, I would say that if I see something like this, that this was a temporary, but I would have to put it into context where I would expect it to be in the larger picture. And for now, the trend remains higher. We could be in some kind of channel here, and until we break below the support line here, we still remain in an uptrend. So I would consider it as a temporary pause in the market, and that we probably would move closer to this, and then take a new rally to the upside again. But at this point, I don't know. What I know, what I do know is that we are getting, the market is getting tight. Momentum is running out for this uptrend, and it has been a good run. So we should be careful up here, and whether you're waiting for this point to break, or you're taking drawing a trend line from down here and exiting the market. But what we know is that we are getting close to some point to exit here before maybe moving higher again. Nobody knows. And this was what I just told you. When you're down here and the market has, and this signal here is been done with, everything can happen from here. But there is something special with this one. This one is very deep, and if the market starts to move higher again, breaking out, let's say from this one, you have the market moving lower, and then now starting to move in the direction. We haven't broken this one, so you can't say that we have started a new downtrend. We're still in the uptrend from here. We have higher highs, higher lows, higher high, higher low, higher high, and still at this point it's still a high low at here. So if we take the resistance line, and when we break that, we have to conclude that we are still in the uptrend. But this one, see how deep it was. It was much deeper than this low over here, and even deeper than this low over here. And this is another signal that is in that you can use the RSI for. And normally we call this when you have this where you have the market going higher, and this one in this you call this a hidden divergence. And normally when you find a hidden divergence as this one, you can expect when it breaks higher again and goes back into the trend, it can be up and down, up or down, but in this case up, that the next move in the market would be a rather strong move. So if we move a bit here, hang on. yeah, there is. Now I've you can see the two lines that I draw on the other one, where I call it hidden divergence. And what we should expect from this one when you see a hidden divergence is that once it breaks here, you should expect a strong move higher, and it should normally be a fairly powerful move. And it's if you see it and if you are aware of those, don't what can I say? Don't if you are aware of them, don't miss them, because they are pretty good signs, and they would really help you take out a good part of the market and maybe profit if you're in this kind of environment where you see something like that. And just we for a couple of times ago we had support and resistance, and you can see here when you broke this resistance line, it added over here, it became support 3 times, and you had a new one here, and then it took off pretty big from there. So that is an important sign. And this is for me, the divergence is the negative, the positive, the hidden divergence are more powerful than just the indicator itself being overbought or oversold. It doesn't really give me anything other than, okay, we are down where it might be turning, but I have no indication of this turning at this point. But this one this one over here is pretty important. It tells me the market is getting tired. We could be moving close to a top now, and maybe even see the market turning from here into a new downtrend. And as you can see here, we didn't break at this point. We hadn't this top. We hadn't broken this one, so we're still seeing a possible move down here as a new downtrend. It's not necessary, but it could have been. Only when we broke that around here, we knew that this was this downtrend here was completely over, and now something new is going to happen. So even though we have another signal over here, I would use it as I said, a temporary correction signal that this market is now in a correction, maybe coming down here before probably taking off again to the upside. So for now, this is enough for the RSI. I would come back to that a bit later, where I would combine it with something else. But for now, let's the RSI be. Oh, sorry, I have something I want to say with the RSI. Let's go back a bit. At this point, where this market moved lower, and I said I don't know if this was a maybe a longer term top, or this was just a temporary pause in the market. If you see a market where the RSI just breaks down as it does here without any pause here at the 50, the index 50, but just breaks down, that is a weak move in the market. So normally you would see like this over here, it comes down, tests the 50, and then starts to move around and then breaks down again. That is indicating of a stronger move. You have the same here at the bottom. You move from 20 to 50 and then starts to juggle around just a bit over, a bit below the 50, and then moves higher. And that is an indication of this is more powerful move than over here. This is a weak move. So at this point, I would have the suggestion that this wasn't the final top, but rather a temporary top. And when I had the opportunity to enter along again, I would certainly do that. And also because of the hidden divergence that we have down at this point here. So that is something to be aware of too, and we will see more of that later. And it's a pretty important point too. The Bollinger Band, for me, it isn't really an indicator. It's more like a series of moving averages that you can follow, but they give some pretty good signals that you can use. And in a market where you see the Bollinger Band, if it's the upper or it's the lower, doesn't matter. But when you have a close outside the band, either on the upside or the downside, and you close, the first close you have inside the band again is a signal that now you're going into some kind of correction. It doesn't have to be a big correction. It doesn't have to be, as it is here, a deep one, but it's a signal that you're now going to move closer to the middle band. And from there, you could move up again, or you could go all the way to the lower band, but not likely not break it this way and start in a new downtrend. Normally, you will see as this, you have a close outside, as this one. You close the next one inside, so you're in some kind of correction. You could have stopped there and started moving higher, or as it did here, and starting moving higher. And you see the same again over here. Here it just follows a couple of times before it closes, and then had a close inside the band again, and you see a sideways move to the middle, and even testing the low before moving up again. And this is pretty common that it does it this way. And you see it over here again. Normally, I wouldn't have expected that this one was becoming as deep as it was here. But again, this was the Corona panic in the market, so everything was more or less screwed up there. But normally you will have seen you had this outside here. Okay, we're down here, and then we should have moved higher here, or maybe a bit lower and then higher. But you can never say, and you just have to follow the rules of the market and wait for this to complete itself, which it did down here. You have some other signals here. You had one here again, down to the middle here, down to test the middle, and even lower at this case. And I think you had one over here. Here you had one, and again down to test the middle. And this one you closed right at the line, so you can't say this. Even though you broke out, you can't say this closed outside and then inside, and you had to go down here. So it just followed the lines up here. Take it for what it is. I normally, if I'm looking at the Bollinger Band, for me, what's interesting is that the lines. This is 20 moving average, and then you have a. This is the standard deviation, sorry, the two standard deviation down here and the two standard deviation higher here. When they all point to the upside, it's a strong trend. When they all point to the downside, it's a strong trend. And I just follow those until you get something else that you can't use. And you can see up here now they're starting to move to the downside. So and it fits with the RSI signal that we had. So we knew in advance something was going on up here, that this could be a top or temporary top, but at least something where you might want to take profit in the region up here, either if you did it here or at least at this point when the market breaks below here, which I expected would do from what we have seen already. Okay, let's move on. I just move myself. A bit of the same here. This is the MACD. Again, it's a bit like the RSI. It has a different scale. It can move below 0 and it will. Here the 0 is what is on the RSI is 50, but it tells us when it moves below the 0 line here, you are in a downtrend, and when it's above, you're in an uptrend. And contrary to what you saw in the RSI, here you have a clear negative divergence on those two. You didn't see that on the RSI. You can just go back a couple of steps. You can see actually here, you don't have a negative divergence. So sometimes the different indicators can show you, can be quicker to show this, and it's fine. This is an absolutely valid signal and a good indication that this is a temporary top, that you should expect some kind of at least a correction. And again, this was the Corona panic, so this became a lot bigger than we would normally expect it to be. And this was a deep, very deep decline, and this divergence signal you had here was completed, and you should look for a new one. And again, you got the same one here, as we saw on the other one. Actually, this is a longer one, but still, you had it here, and you can see again, actually the hidden divergence that we saw before is turning up here again. This one is below those other ones here, so we had the hidden divergence indicating a strong move up again to follow. And finally, the negative divergence here too. You could also use you can see this is a more complex indicator. This is a 2 moving average added, and inside those you have, when it's black, it's indicating that the shorter moving average is moving above the longer, and when they are crossing, as it is here, it's crossing at the 0 point line here too, and then starts to move lower, and they become red. So this forest chart you have down here in this one is a signal to saying when is it crossing, and you can use those if you want to trade it that way. I don't like that, and you'll see that also in the slow stochastic we'll come to in a second. But I see some use this as okay, this is my sell signal, this is my buy signal, this is a sell, and you have an awful lot of trades doing it this way. Fine if you like it to do it, and you will catch most good runs with this, but you will, at some point, you will you likely get into a zigzag trade that would really hurt you big time. But it depends how you want to use it. It can be used that way. I wouldn't do it, but it's possible. I like to stay in trends a lot longer, and as long as I can. I don't want to trade up and down all day, but it's possible to do it this way. Again, I would use those signals here. For me, they are much stronger. They're showing or giving me some much more valid signals is what is going on, and I would use them this way. Yeah, let's move on. This one is called the hook, and the hook is when you see the two lines actually just following each other. It doesn't really break. You are in an uptrend already, and it just moves very close. It doesn't break, and then it takes off. And what you normally would see from those is that they indicate that a strong move is coming next. So a bit like you had already the hidden divergence, telling you, okay, the next move that is coming should be a pretty strong one. And the hook here could be a signal saying, okay, we already going back into the uptrend, but now when the hook is there, it should start to accelerate as it does here. And you can use that. So, but it's important that it just doesn't break. They have to just follow each other. They have to stay in line. And then when it starts to, and you can see it down here, they are almost zero. It doesn't go into the red, just close to zero. And when it starts to move higher again, as you can see here, and the spread between the two moving average is starting to be bigger again, that is when the market starts to accelerate. I'm not sure I can make a straight line, but I can try, and you can see more or less, but it's around there, and you can see that's when the acceleration is coming, and that's just after the hook here. Yes, let's move on. Slow stochastic. Slow stochastic is often used like for more speedy traders. You have a buy signal is when again they are made up of a two moving averages, that is from price, and when they cross, you have a buy, and the opposite on the other side when they cross up here in the oversold, and this is oversold and this is overbought. Sorry. But if you use it that way, again, you will have an awful lot of trades, and you'll get into a lot of zigzag moves, as you saw it down here, seesaw moves. This one would have it might not have cost you a lot of, but it would just have been 2 or 3 trades that wouldn't have given you anything. It just moved in and out, and it just cost pips both ways. So I wouldn't suggest to use it this way, but rather as you can see over here, when you get into a strong move, the market starts to, if it's in an uptrend, then around the overbought 80 indicator, this again can go from 0 to 100 and not above. But when it starts to move sideways, as it does right here in this square, that indicates now we have a trend that is strong and should move pretty good. And when it's getting to the completion, you will see this one move below. You have 2 here. So it's kind of a hidden one, but it's when you see it move below, you would expect one more move to the upside, and this would be the final one. And you can actually see that you have some negative divergence here from the last part of it. But this is a signal, this part is a signal that now you are in the final part of the move to the upside, and it's just a matter of time before it's completing, and then you have to start over again. When do I have a part of the trend that I maybe want to be part of, or at least would like to participate for understanding? Again, you have here at these 2 points, you have divergence. So you could see we are in an overbought territory, oversold territory down here. You have divergence, so this could be a good buy here, or otherwise, at least at this point up here, when it breaks, this is confirmed, and you can now buy, and we're still in the uptrend. And then you have some movement up and down here, as this is going into just the sideways consolidation until this happens. Again, you start to move sideways within this area and not just up and down, as you have seen over here at some of these. But now it's really trending. And again, up to here at this point, where you break below this one. So you now break below, even below the box over here, but this is a pretty strong warning that now you are in the final part of the trend to the upside. And you also have at this point, if you take the RSI, you have the divergence. So maybe if you want, you could sell at this one, or you could wait again to have this one and break below there. Okay, let's move on. So this is likely what you will see in most charting systems. You will have what we call the DMI, where you have 3 lines, and you have those calling the directional moving index. These are those 2, and then you have the red one, which is the ADX, which is the average directional index. And the one now, I'm going to remove those, and it looks like that. But what you can use it for is when it breaks above 20, you are in a trend. And it doesn't matter if it's an up or a down trend. When it's moved above 20, you are in a trend. So at this point, when you break the 20 here, likely with this one, you know you're in a trend now. You can buy this, you can go with this because it's trending. It could be trending before that, but this indicator says at this point it's starting to trend. You don't know how long this trend would last, but at least it would move for some point, and you have to use something else. But this is the trigger for you: moving above 20, coming from below and moving above. That is when it starts trending, likely with this one. Again, over here, moving above 20, but this time in a downtrend. Probably this one at that point. So you know at this point, actually, if you have used just this support here, when you broke there, you could see it, but using this one now, you know it's in a trend that could last for whatever. This one can't help you with that, but the signal is when it breaks above 20, that's a trend. You have it again here, becomes a short one. You have it again here, again, pretty short one. And you can't use this for, and you had it here too, you can't use this for anything else than just to see when it breaks above 20 that now you're in a trend. And that's the important stuff here. Okay. So what I would like when I do this, normally my favorite is the RSI, but depending on how strong are you in using this, and then you can see here I had filled in some of the different, you have the negative divergence here, but when should I sell? That can be a problem. Somebody would just sell because they see a negative divergence and still continues to move higher, and maybe they panic and enter the market again, and then it tips over and starts to maybe fall or whatever. So so there might be something, and then you can use the MACD for that. That can help you. At this point, you have the negative divergence, starts here and moves on for most of August and September. I have this support line, and actually you could just have sold over here if you want, or taking profit, but you can also use the MACD in combination with this one. So at this point, you start to have the divergence, and here it breaks and indicates it's time to sell or take profit. And again, you can use it the same way here. You have a positive, you move down, and from here, this divergence is now completed, and you have a new one starting up here between those two, and you can either enter the market here or here, doesn't matter, or you can wait to this resistance broken. This one wouldn't be a proper signal, but this one over here would be the signal to go long again. And pretty quick after, you have a new divergence here, indicating that this could be ending pretty quickly, and maybe also quicker than expected, because you had the hidden divergence over here. So this might be the end of just a temporary, or this giving way to a temporary correction, and then moving higher again here. Because looking at this one, you move down, it's complete here, but now you can see again you have hidden divergence as you had over here, and you have positive divergence between those two, together with the hidden divergence, indicating that this one ultimately will break to the upside and move higher, and you have the buy signal here again on the MACD. Again, this is a way to combine them, and if I does this, this is the way I would use them as a combination, where the one is the one saying, okay, the market is now getting tired, and the other one is giving me the trigger, or at least the idea that now could be a time to maybe get out of the market, take profit, move into the market again. As you can see now, all the other ones, when we went through those, was the British pound against the Japanese yen. Now I switched to euro dollar, and we will keep this as a combination for looking at the other major currencies. And the next one is the dollar against yen, to see what this is doing right now. And this one, you can see it's almost equal, but actually you have a negative divergence here. You have a sell at this point, you have an uptrend, either this one going here or the sharper one going here. But at least you know at this point here, it could be a sell because you have, this is a divergence. This is indicating from up here that you are in the overbought territory, and actually you have and you can have this in the RSI too, and you can have like double top, like you have here. So when you break here, this is your signal for selling. You might see, I don't see any here, but if I see some on the other ones, you can have shoulder head shoulders, works the same way, and they are actually pretty good signals in the RSI in this one. So they are worth using. And again, this one signals that the dollar might be weakening again. If we go back, the same signal over here, correction, and ready to start moving high again. We have all the signals saying that. Again here, the dollar should could be weakening. We still haven't seen this. We still have higher highs, higher lows, and have had that. So what we need at some point is market coming down, either to take this one out or maybe go into a shoulder head shoulder and move. Lower from there. Don't know that yet, but it's a possibility that it's going to do that. Again, British pound. You see some of the same thing here. You have the divergence maybe building here. Maybe we're going a bit lower here, but already you can see the RSI is not confirming this move down. So if you just make a short break below this one, you would have the divergence. Still just a possibility, but it's there. And actually you have a hidden divergence. So this could indicate that the next move could be a strong move to the upside. So it's worth looking for. Again, you had it over here, same. You had a hook here, just around the time when this broke out. And you can see this was a pretty strong move in this one. This one too here could go be a shoulder. Don't know that yet, but it's a possibility. Shoulder head shoulder. And when he breaks this neckline here, it would indicate that this temporary correction is complete, and now the move higher again. So the dollar actually does look as it's ready to repeat its dropping trend against the majors. So that might be worth looking for in the future. Swiss franc, same issue. Negative divergence in both of them actually. You have the sell signal over here triggered at this point. We still don't have a break of the higher highs and higher lows, but it could be something coming here, or maybe even as a shoulder head shoulder again, coming up here and then down. So all the majors is pointing towards a weaker dollar going into the summer month. So worth looking for. And this one is pretty interesting stuff too, because I've shown the hidden divergence on the downside, but you can see it here at the top too. This one, you had this as the top, and you had another top down here, but actually you can see the RSI is higher here than it was here. So you had the hidden divergence on the upside too, and indicating that the next move down would be a pretty strong one. Not that this wasn't a strong one, it was, but it indicating that despite this being higher, it will still see more downside, and it could actually be a pretty strong move to the downside. Okay, so I was thinking hidden divergence. Could I find something where we have no divergence on the upside, but we have hidden divergence on the downside? And some of those that often do this is weak currencies. And this one is the Turkish lira against the US dollar. And as you can see here, you have no divergence. So this peak is confirmed. We don't have any divergence yet. It might come on the next one, but we don't know that. But we have hidden divergence indicating that the next move that should break this top should be a strong move to the upside. And it could be a signal that something is very wrong. And we know already that the Turkish president, he fired the central bank manager for Turkey, and he had a new one in that position. But I think the risk of the Turkish lira being a lot weaker is very big. And the next ones is just for indication. It's not, I'm not going to say that this is going to happen for Turkey, because I don't know, but it's a risk, and you should be aware, if, because Turkey normally has a interesting interest, and it's good for using as interest-bearing currency. But you should be aware that the risk for the Turkish lira to be much weaker is pretty big. So this one is the US dollar against the Argentinian peso. And look at what happened here at this point. Still, we had seen a weakening market. Could be actually the same as we saw here in the Turkish lira. This is because the weakness in the Turkish lira isn't that big yet. It hasn't done what you see here. So this could be the same place, and this low is around here. But see how this low was lower than at this point, this point, and this point. All of them way below what the market was here. So we knew, or we should expect, that once you break above this resistance, that the next would be a strong move higher. And again, it didn't actually, it hit 100, but at this point, it wasn't any divergence saying that something was wrong with the upside move. So this is actually what we have just seen in the Turkish lira. So the risk here is pretty high for this market to move strongly higher. So a much weaker Argentinian peso and a stronger US dollar, just the same as we just have seen over here. And taking this one, and this is extreme, I know, but still, we have the US dollar with the Syrian pound. And see here, this is a low, and here we had a low again. That was this low over here, and here, which is a higher low, 2 times. Hidden divergence, indicating that we could have a move pretty soon that was would be a pretty strong one. And then, and I'm at this point here in 2007, and this is in 11. Nobody knew that there was going to be a civil war in Syria, but it triggered a move higher, pretty strong one. And now see what's happening again. Still, this one, no real divergence up here. And then this from here to the end here, hidden divergence 3 times again, just before this happened. And you now have it again here. And the risk that this market is going a lot higher, maybe to 1,000, something like that, is pretty big. So I wouldn't recommend anybody trying to sell Syrian pound or anything like that. But it is just to show the power of hidden divergence when they happen, and you don't have any divergence, what can happen in the following. So this is a warning for people maybe considering going into the Turkish lira. It's a very dangerous move to do, and it can be rewardful, yes, but the risk is very big for this to just explode when we break up here. Okay, I think that was my presentation for now, but maybe we have questions. I can see I have 3 in the chat. Nobody? Anybody have any questions? Otherwise, I think we're about there. I've taken about an hour. Can you send a screenshot of this? I would expect that you might get a the presentations from InstaForex. I don't know if they have the presentation. They have it with the same charts as we just seen. So I would expect they would send it to you. Is that correct, Marilene? Perfect. Great. I don't see any more questions. So thank you for tonight, and I hope it has been a good presentation, and that you have picked up some clues how you can use this in a different way. So yeah, I can see Marilyn confirms that she would send the presentations to you. So otherwise, just write me on InstaForex, and I would make sure you have it. So perfect. Thank you for this evening, and have a good evening and a very good weekend. And I think we will be back in about 14 days or something like that with the next part of this webinar series. Thank you, everybody. Have a good night.